Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Monday evening, the 10th of August, 2020, about 5:55 p.m. Central Time. So we're looking, and remember, we're open already. We're looking at gold still having a bit of a retreat or trying. You know, the markets were all over the board today, but mostly up days in the silver market, the gold, and since it's reopened, a bit of a down. The powerhouse was copper. It came racing back rather dramatically from a break on Friday. If we look at the energy markets, they're holding pretty good bids here. So the markets are looking at a series of things. Number one, the Chinese delegation coming in this week. Market does not expect the trade deal to fall apart. They think that it'll continue on, whatever that might mean. We're looking at the fact that the president did sign executive orders that pumped money into the economy. Whether it's enough or not, I'll let others debate that, but it's better than nothing. And I think it's looking very hard at the fact that the door is open if the Democrats and Republicans can get together and strike a better COVID deal. So we've seen that. We don't know where it's going. The stock market, ex the NASDAQ, was higher today. The NASDAQ saw a correction time. When we take a look at gold, you can see that for the week, and we're only on Monday, we're up $14, 2024, and certainly a new all-time high close at this point on a weekly basis. When we look at a daily bar chart of December gold, even though you had the market, and we can show this, up today $11, the market's still staying away from that all-time high that it made, and that high was made last week on Friday when the prices hit it's hard to believe, $20.89, and then they came crashing down from there, $60, right, basically, and you got a small bounce today, and you're pretty much unchanged tonight. What's the pattern? It's still bullish. You still have a pattern here of higher lows and higher highs. As long as you have that pattern, you're bullish. The last break low is here in that 1950 zone. When I put on moving averages, you can see that we're now over that number. I thought it would get there if you saw me on Saturday when I put out my update. Sorry I had to do Saturdays and Sundays, and as I told you, I had a family event and I just couldn't get away from it. But you can see where we're at. And by the way, I am hoping this Sunday to have our live webinar at 5 p.m. Central Time. With any luck, I'll have the invitations out tomorrow, I'm hoping, for our subscribers, and then after they have had a chance to sign up first, then I will allow seating in for the other people that are non-subscribers of mine. But higher lows, higher highs, still bullish. What about resistance? Well, the market had been running this upper Bollinger Band for a long time, and it's now backed away from it. So it either goes right up to it again, or most likely it's got to consolidate this gain. That's where I think we're at right now. Which one of the two does the market want to do? What bothers me about the consolidation phase is you're losing the embedded reading. Now, when you get an embedded reading that starts turning down like this, you see that the number's under 80 here? It wasn't, and I'll come here on Monday. You're losing it tonight. That is Tuesday night. If it stays lost, the odds favor that price and the 18-day average are going to try to make a run at each other. Whether it succeeds in dropping $70 from here, I have my doubts on that. It could. Don't know. Not that concerned. Why? Even if it does, my bias is to the upside. As long as you're over that 18-day average, I am looking for my subscribers to my research to find ways to get long, not short, until that is gone. I certainly don't want to see this 1950 area taken out. What about the gold-silver ratio? Continues to crash, which means silver has been acting stronger than gold. And you see that on this chart very clearly. It also has the embedded reading and it's not losing it. So if traders were to step in and come to me and say, well, which one of these markets is stronger? Well, you don't need me. Just look at the chart. Which one do you think? The smaller these numbers get, the less ounces of silver you are using to buy 1 ounce of gold. That's the way to look at it. In terms of the market, well, this is a key number back here, and you're well over it at $24.61. If this market were to break almost $4.50, that is still what I look at as support. I don't see anything to break it that amount, but anything can happen in futures. In the copper market, remember what I tried to explain to you last week. This is the makings of what I call a pipe. And when you get into these, you try false breakouts. It is very common. Doesn't mean I'm going to be right in my analysis, but it's what I've learned over the years. Here you get your break. The market's going to fall apart. And all of a sudden, you got this huge rally right back into these numbers. All we really did so far is widen this out from being too narrow, maybe to a bit more normal of a 15-cent range in the market. What is the trend? It is down. Why? Because you have lower highs, lower lows. So the pros, the resistance is going to be the 290 level. I don't like the risk factor back up to 293. I think it's 90 you'd have to risk here. 294 actually. That would be the number, one tick over that high. That's an awful big risk. That's $1,000 a contract if you were to go short at 290. For me, that's too much. Plus, there might be some divergence. You're trying to turn momentum back to the upside. So I have trend down, bias down, but momentum trying to turn up. In the platinum market, I have an overbought market that's got a pattern of a higher high and a lower low. And what it has been able to do is, since back here in July, it has really found its footing against this 18-day average, and it is keeping it. So are we in a corrective mode? A bit of some in the metals. Nothing major that I'm seeing. I'm concerned with momentum in the gold. In the platinum market, you still have the pattern of riding this 18-day average of closes, that line in the sand, as I like to call it. Remember the importance of it. When you're above it, it's not uncommon to fall back to it. When you're under it, it's not uncommon to rally up to it for resistance. It's from that number that it decides what to do. Here you had one of those pipe formations that I talk about, and you broke out. And when you do that, it is often, you just get what I call that gorilla glue feel. Price locks onto that upper Bollinger Band, and often you get the embedded reading. You lost the embedded reading, you came back to the 18-day average. This market's trying to figure out right now what next. I want to talk to you about Modern Trader. You know, they put together a phenomenal amount of brochures, and this one's strategies for all kinds of markets. Now this is the table of contents that you can see, and it gives you an idea of everything that they talk about, rules to follow. There's so many of those. 10 rules don't cover it. But the articles look like this. The charts are really fascinating to look at, well written, well explained. The base pattern. I believe in a base pattern. You got to learn to recognize them. I do it via my pipes. And these give you ideas as to what they are and different ways to come in with that. So how do you get this? It's pretty simple. Simply call my staff, or better yet, you can even go to the website. You'll see free offers on the bottom right. Click on that, fill out what you want. We'll get this to you. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.